In this video, we will see if Xcn coin will be $1. But first, let's look at it with technical analysis. Please watch until the end so you don't miss anything. Looking at the chart, we can see that the price has been in a downtrend from the top, and this downtrend is still in effect. As long as the price action remains below this trend line, it suggests that selling pressure is dominating the market and the trend needs to be broken to the upside for a strong bullish move to begin. Downtrends usually signal that sellers are dominant and the price continues to move downwards. Therefore, a breakout of the downtrend would be a critical step for a bullish move to begin. If the price manages to break this trend line to the upside and retest it, it will be ready to rise and attract more investors. Looking at the price action on the chart, we can see that the falling trend line that we created by connecting two important tops was broken by the price to the upside, and it is currently making a retest move above this trend line. Such retests play a critical role in confirming trend reversals. If the price successfully tests the broken downtrend line as support and receives an upside reaction from this level, this could be a strong signal that the uptrend could continue. One of the most important things to watch out for during the retest is whether the price dips below this trend line and gets an upside reaction from here again. We will see if it can get a reaction from here, and there is a strong bullish order block at the bottom on the chart. This area is notable as an area where buyers stepped in and initiated a bullish move when the price has been here before. The last time the price reacted strongly from this order block and made an upward move. Since order blocks are often where large traders take their positions, such areas act as critical support levels. When the price approaches this level again, it's important to watch carefully to see if a strong buying reaction comes from here again. If the price approaches this bullish order block again, and there is volume buying here, it can once again confirm that this area is a strong support area. The less the price touches an order block, the more likely it is to get a reaction. And there is a strong bearish order block at the top on the chart. This area is notable as an area where the price previously faced selling pressure and moved down when it reached this area. When the price hits this area, we can see that sellers step in and push the price down. Since bear order blocks are usually the levels where large investors sell, such areas act as critical resistance zones. If the price approaches this level again, it should be carefully watched to see if selling pressure increases again. If the price rises towards this bear order block and can break it, it will look for a new high. In the framework of the Elliott wave theory, we observe that it is currently in the fourth wave. In the Elliott wave structure, each move has a specific sequence, and the fourth wave is usually seen as a consolidation or correction in the market. This wave usually comes after the three previous waves and is formed over a period of time as market players take profits or reorganize their positions. The fourth wave comes after the previous three waves and usually marks a kind of pause in the market's movements. During this period, the price usually experiences a pullback or correction, but remains near the peak of wave 1. After the end of the fourth wave, the fifth and final wave of the Elliott wave begins. The fifth wave is generally considered to be the final rise of the market and involves upward movement with greater momentum. Of course, it will not go to the fifth top all at once, but slowly. The ascending channel structure seen on the chart is a pattern where the price moves between an upper and a lower boundary. This type of channel is a structure that usually indicates that the trend will continue, but when the price moves near the upper band of this channel, a pullback or pause can often occur before a breakout occurs. Since the price failed to break the upper band of the ascending channel, it is currently retreating towards the middle band. The middle band refers to the equilibrium level inside the channel and is often considered a zone where price works as support or resistance. If the price moves down to this zone, it may indicate that selling pressure is increasing and buyers are struggling to push the price back up. At the moment, the price is in the mid-band, and it looks bad to move down. But once it breaks above the mid-band, it will want to touch the upper band again. The Bollinger Band is a technical analysis tool used to measure the volatility of the market and is usually composed of three bands: the middle band, the upper band, and the lower band. These bands widen or narrow according to price action, and the movement of price between these bands can give a lot of information about the market. Currently, the price is moving in the lower band of the Bollinger Band, and this may indicate that the price has been trading at lower levels recently, and there is pressure in the market. When the lower band comes into contact with the price, it usually signals an oversold condition, and this could mean that there is an increased possibility that the price will bounce back. However, if the price stays outside the lower band and continues, it could also indicate that the decline could continue for a while. And we see that the Bollinger Band is narrowing. This suggests that the price will soon break out in one direction or the other, a The MACD indicator measures the market momentum by showing the difference between two moving averages. Usually, crossovers between the signal line and the MACD line signal trend changes. The MACD crossed from top to bottom, indicating a bearish momentum in the market. A MACD crossing below the zero line indicates that the market has moved into the bearish zone, and selling pressure is increasing during this period. This may increase the probability of a bearish continuation. However, an important point is when the MACD makes an upward crossover at the zero line again. If the MACD line crosses the zero line upwards, this could be a signal that the uptrend has begun. This is because when the MACD crosses above the zero line, the market is in positive territory and buying pressure may start to increase. If there is another upward crossover, the price wants to make another top. In the RSI indicator, currently, there is an important support point on the RSI indicator, which has been repeatedly reacted to. Such a situation indicates that the support zone is strong and the price may rebound against a weakening bearish momentum here. The fact that the RSI has repeatedly reacted at these levels indicates that traders prefer to open buy positions here and that buying pressure may increase when the price hits this level again. Also, the RSI is currently just above the support. This suggests that the price is starting to approach the support zone again, and a rebound or a change in direction could occur here. In case the RSI doesn't break below this level, the bullish expectation may be strengthened, as the price may react in this area before the support level is broken. If the RSI gets an upward reaction from here, the price will also get an upward reaction. On the Vortex indicator, a blue line on top is considered bullish, and a red line on top is considered bearish. In the current situation, the red line is on the upper side, indicating that bearishness prevails. This signals that the market is currently in a negative momentum, and the price is following a downward movement. When the red line is above the blue line, it indicates that the downtrend is continuing and selling pressure is increasing. In such a situation, traders may think that the bearish potential is stronger. This could lead to a profit realization or intensified selling pressure. However, if the blue line crosses the red line, this indicates that we are now out of the bearish market and entering an uptrend. As the price is currently approaching the 200 EMA, this move has an important technical significance. The 200 EMA is considered a strong indicator of the long-term trend and is often used by traders to determine the support or resistance level. A break above the 200 EMA usually indicates the start of an uptrend in the market or a continuation of the current uptrend. However, a price moving towards the 200 EMA means that it should retest when it approaches this level. Retest means that the price tests this level by reaching the 200 EMA and then returns to this level again. This provides the real validation in the market. So if the price breaks the 200 EMA level, this level should act as a strong support. If the price is able to cross this level and stay there for a while, it means that a strong uptrend can start in the market. After making a retest above the 200 EMA, it can resume its uptrend. Let's take a deeper dive into whether XCN coin can become a $1 coin. First of all, it makes sense to compare XCN coin to Shiba coin, as this kind of evaluation can be an important guide to understanding the market potential. Since its inception as a meme coin, Shiba coin has gained a large community and rapidly growing popularity. However, Shiba's actual success was largely driven by speculation and social media influence. However, what kind of value Shiba actually offers is questionable for long-term investors, and if XCN coin replaces Shiba coin, the price will already be $1.26, which is 76x, and the future of XCN coin is a different story. XCN coin is a project that aims to create real value, not just an investment vehicle. The coin is making significant strides in areas such as technology, security, and the improvement of financial systems, which makes XCN a project that creates value. Projects like XCN benefit not only from short-term speculation, but also from constantly growing and evolving ecosystems. If XCN coin is backed by the kind of massive community impact and rapidly growing awareness that Shiba experienced, it could have just as much potential. But the important thing here is that XCN coin needs to create more value and provide real use cases. This is because projects like XCN aim to provide investors with not only short-term gains, but also lasting value in the long term. While meme coins like Shiba are often fueled by community support, projects like XCN are driven by factors such as real technological innovation and the transformation of financial systems. When it comes to reaching $1, XCN coin's potential will largely depend on this value creation process. If XCN develops with the right strategies, attracts institutional investors, and establishes a solid use case, it could follow Shiba's path in a healthier way. This could be a very valid prediction. especially at a time when valuable projects and long-term gains will come to the fore. The fact that meme coins like Shiba have experienced a pullback at a certain point shows that they are coins that are only invested for fun and speculative purposes rather than to create value again. In contrast, projects like XCN can offer true sustainability independent of communities. So, XCN's future depends on continuing to create real value and being seen by the market as offering a solution. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.